Hello, I'm Martin Smith, and this is your MaxiForex Week in Review. Let's begin with the week's risers and fallers. Well, the euro-dollar pair traded mostly positive and finished up 1.27% for the week, last trading at 128.95. The British pound continues to trade mixed against the dollar and dropped 0.35% to close at 154.60. The US dollar finished its third week in a row down versus the yen. The pair traded mixed on the week and ended down 1.08%. The pair last traded at 84.41. And the Canadian dollar had a mixed week against the greenback, but two very strong days for the loonie pushed the pair negative, falling 1.22%. The dollar CAD was last trading at 103.93. Commodities, oil traded mixed, dropping 0.76% to close at $74.60 a barrel. And gold continued to rise and gained 1.12% for the week to close just under $1,250 an ounce. In news this week, the main headlines were few but significant. Speculation around the yen continues to dominate currency headlines, as the Japanese government is set to begin taking steps to reduce the rising value of the yen. Exporters are already beginning to feel the effects of a strengthening yen, with nearly half of Japanese manufacturers claiming they are seeing lower sales. Japan hasn't intervened in the foreign exchange market since 2004, when the yen had reached 109 versus the dollar. A very conservative country in terms of government finance policy, Japan's Prime Minister and other officials have made it clear they are ready to take bold action. To what extent their actions will be effective is another issue altogether. It's become increasingly apparent that they will be going at this task alone. The US and European financial bodies have no interest in lowering the value of the yen at a time when they too are trying to boost exports. President Obama has stated that he would like to double exports in the next 5 years, and while unemployment is as high as it is in the US, I think you'll be hard-pressed to find any assistance coming from this quarter. Well, on a positive note, the US non-farm payroll came out much better than expected, sparking rallies in US and world stock markets. The report came out showing that US employers added more private jobs than economists forecast. Private US payrolls rose by 67,000 in comparison to an expected 40,000. This came at a time when some reevaluation of risk assessment had been taking place in Europe and helped to increase risk appetite, sending investors on a buying spree for higher yielding currencies. The general sentiment seems to be that the US economy may have avoided slipping back into a recession, that although growth numbers are weak, the progress is, however, steady. This brings me to our Ask the Broker question of the week. Nicholas Neumann of Braunschweig, Germany writes, "I am often hearing of the non-farm payroll, and I would like to know why it is important to Forex." Well, the non-farm payroll is a statistics report that is compiled and released on the first Friday of every month. The report is compiled by US Bureau of Labor Statistics and is meant to represent approximately 80% of the workforce that makes up the US GDP. The jobs data is viewed as the single most important report out of the US. It's relatively accurate and provides a broad look at the health of the economy. Jobs or job creation is at the heart of the US economy. More jobs mean more income, which means more consumer spending. The US, being the largest economy in the world, is also the greatest consumer in the world. The rate of consumption and imports in the US has an effect on the entire world's economy, and so when jobs begin to disappear, investors take notice. When jobs increase, nations whose currencies are tied to growth expansion also experience a boost in their currency's value. Countries like Australia, whose economy is tied to mining, would experience an increase in the Australian dollar value. When jobs in the US decrease, however, investors become concerned about growth and jump to safer currencies like the yen, Swiss franc, and US dollar. Well, that's it from me. Be sure to visit us at maxiforex.ru.